What is up, everybody? Logan coming at you guys with another video here today. And it's been a minute. I haven't uploaded in the last couple weeks. Just had to get some thumbnails done, and I've been just enjoying life, playing golf, hanging out. So, back on that grind though. I just want to make sure I keep YouTube fun. But today we're going to talk about how in the last few days I've actually been able to scalp about $40,000 just over in options trades, which is really cool in the last 3 days. So I'll show you guys the risk. This is also on a really high level portfolio. So you're talking seven figures. Right now, I only have about 300,000 dedicated to scalping. As you guys can see down here, the overall P&L year to date, and I started this account last week in total. But in combined in about the last week, we're about 54,000 up. I'm currently working an order to close these 50 out at a 40-cent debit, the 5305, 5295s I have on for today. But I want to go and make a deep depth video because I haven't done this in a while on what I look for in scalping. We can talk about some of the risk management factors that I take. But also it's like, dude, if you're doing scalping, it's quick entries, quick exits, right? That's the name of the game. It's to just get in. You can hold some stuff to expiration if you're going to do that, but these are all zero DTEs. Occasionally I'll roll them to the next day, like you can see down here. These are my May 22nds for today. I do have some May 23rds. I push some contracts really far up because we have NVIDIA earnings tomorrow, right? So if we start, I also have my girlfriend's dog on my lap, a little dachshund puppy. What's up, Ranger? You guys should leave a like for Ranger if you haven't at the moment, or a little dog emoji. He's hanging out with me, so if you hear some barking, that's where it's coming from. Um, so I'll be holding him as he tries to lick my face and do whatever. It's just the options pricing. So we have a VIX if we go to my chart tab, right? And then, oh, sorry, I forgot to show you guys this too. These are all of the other fills. You can go through and do all the specific math if you want to. But I also have a picture I'm going to pull up here. But to make it easier on you guys, over the last couple days, so from May 20th until today, of course, which is the 22nd, this is the overall P&L. It should line up with all of these fills that you see in here, and this is commissions and fees included. I don't want to leave that out, but just know everybody's commissions and fees are different at the moment. So me using Charles Schwab and the TOS, this is what we're looking at right now, but this is to make all of this easier so you guys don't have to go back and punch all these in if you want to do that for whatever reason. All right, so we'll talk about the charting now though. So let's hop over to charts here. So one thing for me that's been really helpful, and if we zoom in over here on my 10-day, 30-minute chart, is we have really respected this level, which is our old resistance, this 50, this is on ES, this 50, let me move my head so you guys can see. So over here, right, we have like this 53.40 to 53.30 and all of this accumulation within this range. So, being able to sell put credit spreads underneath my blue dotted line has been one of my favorite strategies when the VIX is this low. When you're in a bull market, which is really helpful because when you come out of something like April, where it's super volatile and people might get more aggressive when the VIX is high because they say, hey, the premium's way better. Hey, I think I know which direction the market's going to move. Most people actually get eaten alive quite a bit. So one thing here that's really nice with all the scalping, now that the VIX is low, this is the easiest time to be a premium seller, right? This is 100% the easiest time to sell premium. So for me, I'm always paying attention to my white dotted line here. We'll click on this as the 195 day. This is down here. The green lines are 390, but I'm always paying attention and I'm just continuously selling put credit spreads under this level, right? And I can always adjust if the support breaks. So my risk management is I will take a trade off or I'll roll it and begin to hedge it if I need to, of course. But most of the time on these scalps, and by most, I mean 90% of the time, we're taking trades off if we lose support. Now on the CCS side, I don't take a trade on a call credit spread unless the ES gets up to 53.40 for the time being. And if you're like, Logan, but how do you know, or what is your idea? Because we saw the market rally day after day after day before, and it's like, correct, but also look how the volatility's moved, right? The volatility on those days, I mean, you're talking a 14 VIX, Right now, we are at our low. 11.78 is the 3-year low, which is generally the best time to be an option seller on both sides as well. Yes, you have a higher chance of getting ran over if the market does move, but if it doesn't move, and we have all of these pieces like the VIX to see, hey, are we breaking back above the averages? Are we trying to revert back to the mean? And if we're not doing that, right, if we're continuously just getting shot down with more volatility, okay, well, it's much easier for us to just keep trading the S&P. So I have my close order in. I'm just trying to scalp these contracts too. So selling an option, and getting in and out really quickly doesn't require very much movement if you're doing a 0 DTE. If you're selling it, right? You just need time to pass and then the contract comes off in general. So for example, today we did 40 contracts I rolled for $1.10 a piece. So that's, just over $4,100 in credit collected over here. And then on these 50, I'll move my head, we got 90 cents. So I have them grouped down here as well. So you guys can see the P&L that's currently open is about $2,000. I'm working to close these for 40 cents, as you guys can also see here. I'll move my head again. There we go. There's your 40-cent debit that I'm working to close these for. It'd be nice if they fill now, but that'd be a nice little scalp. Collect another $2,500 to $3,000 into the port. Grab it for 90, get rid of it. Yeah, about 2,500 bucks on that trade. And then we also, like I said, collected about 4,000. So in total, that's going to be around $7,000 collected today, just under. So for me, and that's so far, and I probably won't put another trade on today as it's already around 11 o'clock right now. So I like to get in early, get that move and take the risk off and stick to this 40, 50, 70 contract level for a lot of these scalps that I'm getting in and out of. So for me, I'm really trying to pay attention and stay as level-headed with the markets. You have to pick a contract size that doesn't make you emotional. You have to really focus on how you're positioning yourself in the market. You can't just say, oh, a contract's out of money, so I'm going to put that on because it's out of the money. Even same with me, right? Like when I rolled these 5370s up, like I'm totally aware that I'm within the expected move now, right? So if I take a look at what's this 1 DTE expected move, well, it's 40, right? 40 points in a VIX that's this low is massive. When today's expected move was only 18 at close, right? The previous day's close was 18. I'm using this as 40. So, as long as we close below 53.30, I'll be outside tomorrow's expected move, which I do think is going to be a bullish move, but I still like these call credit spreads where they're at. If they don't work out, I've already collected so much credit on that specific trade this week. That's where most of the credit has come from, is just rolling and collecting, that I can take those off for a small loss. If I want to close them out for a $2, $3, $4 debit, and it'll set us back a little bit on the week. For me, overall, my goal this week is I'm out, about 50 to 60,000. So far, we are just over the 40,000 mark on the week over these last 3 days. And my overall goal on a portfolio like this for scalping would be about 100,000 a month, because at that point, it's really worth my time to do. But also, like, you're taking on a lot of risk every day as well. You're also going to have losers when you're doing this. So I know for me as like a pretty seasoned options trader, especially scalping 0 DTEs and anything on SPX, you guys have seen me do this for years. Like, this is my bread and butter. Nothing feels more natural to me than scalping these options. So overall, it's been a really solid week for me, and I hope we can continue to see this move up here. And then, 53.50, that seems to be a pretty solid resistance point that we're coming into. But you have to remember, we are basing. If you look at ES, I mean, this is as much basing as you're going to get before you get a big move. So I expect to see that tomorrow with NVIDIA earnings. The market makers are already telling us this, though. Why is the expected move 2.2 times higher than normal? They know what's going to happen, right? So that's why we have such a high expected move. We have NVIDIA earnings, and that's after hours today on Wednesday, May 22nd. So I'm just keeping my market situational awareness high. I don't have any other commitments that I need to absolutely be at right now. I'm able to just sit and trade. So it's just that mindset, right? Being relaxed, being comfortable, holding support, right? Anytime we hold support, just sell those put credit spreads. and then just pick one side at a time. I know right now I have this little like condor going, but they don't expire on the same day. I try to make sure that doesn't happen very often because I think most people get screwed playing iron condors just because it's so hard for the market to not move for you. Even though the VIX is low right now, I still prefer to take just one side. And I try to go based on what our internals tell me and where our support is. So if we're talking about market internals, the advanced decline, right? I really like to use the advanced decline. This will tell me, hey, we have a lot of positive volume that came in today. We had a lot negative overnight, but intraday, because I'm doing these intraday pieces, like yesterday, I grabbed a PCS right at open. Well, why did I do that? The advanced decline rose from negative 800 all the way to basically the zero line. So as this candle was rising, the market was still calming down. I got in and then it started to continue up with that move there. And I was able to get in, grab my premium, and close that trade out within an hour. So that was always a nice trade there. Monday was also very solid. I had some CCSs I opened up here into this candle. We were coming into the same old resistance that we have been previously. If we go back to the charts tab and we can look at multiple time frames here, we'll zoom out. But over here, as you can see, we're up in the nosebleeds now. The RSI is back to 70. So I don't mind giving some CCSs a shot. We're in a bull market. So yeah, I don't mind taking some shots at CCSs once you get to the top of the range, especially on my standard deviated charts here, right? This has predicted a lot of our pull downs from the top to the bottom in the 2022 bear market. This has also collected and helped quite a bit on picking the bottom of our most recent pull down that we had throughout last summer, and then this massive rally that we've seen since then. And I could see us continuing to just go higher, try for 5,400, 5,500. As inflation cools down, people are going to still want to invest in the markets. And to me, it's a very simple, straightforward idea, strategy, and just a thought process when working with managing funds and trying to grow a pretty steady and solid portfolio. So for me, like if I'm managing risk to the downside, I wait until the volatility brings at least 3 green candles in a row on my hourly chart because I'm playing so far away and so far out of the money for a lot of these trades. And I have really solid entry, right? My whole goal is to just focus on good entries. That should be your main goal as a trader. You can manage risk once you're into a trade, as long as you have an idea on how you're going to do it before you get into one. But people don't realize that the entries will always be your most important piece of trading when you're scalping 0DTE SPX options, in my honest opinion, because that gives you so much leeway. Because you guys know, right? If you're trading on SPX credit spread, let's say you're doing a 10 wide, so you're risking $1,000 to make, I don't know, let's just say you're doing a really good 2-to-1 risk reward. So you're risking like 1,000 to make, 300, right around that spot because you keep that credit no matter what. So that's really 2-to-1 risk to reward. Your max loss is 700, your max gains 300, right around that, 3-to-1, 2-to-1 spot. So in between that 3-to-1 to 2-to-1 risk, you have the option of, well, I got a lot of credit. If I collected $3, I can close this out at 2 and collect $1. Or hey, I collected $3, so if this goes to 4 or 5, I can close it for $1 or a $2 loss. So you have to think about that and make that your main psychology when you're entering these positions, because like you guys can see down here, this was up, 22,000 or sorry, 2,200 earlier today. Now it's only up 1625 because these prices are always going to move. So my trade price is a little lower than it was earlier today. So when the VIX is this low, especially with an event tomorrow, my main focus is going to be trying to close this out for this 40-cent debit. By collecting, on 90 cents, which I got here, it gives me the leeway to do that, right? To collect that 40 cents. To say if I was opening this now, right? And this right now is trading at 55 cents. You guys can see I moved the little head. To me, isn't a great risk reward because I don't want to just collect 15 cents and have all of that potential risk for what can go against me. So you have to want to get in with a good credit that you feel like you could set an actual debit where you'll collect enough money for it to be worth your time. But not only that, to stay very smart with your risk management procedure. If you're just opening things for 40 cents or 50 cents and just full shipping the port, what's going to happen the one day that it goes against you and you're like, oh no, it's at $3 now. I've never seen this before, and then you panic close and you screw yourself on the position. So I think it's really important to collect good credit. A lot of these credits I've collected are around that dollar, $2, 250, 240 credit collected per contract. So I want to help reduce all my outstanding risk. If I'm going to have this risk out there, I need to either get a debit to close in ready for a profit, one to take for a loss, just something that keeps me overall in the month profitable, maybe on the week profitable. Because the worst thing is winning like 5, 6 trades in a row and then you take a bad setup or you just try to get in to collect some premium and you completely miss out on what could have happened. And then you screw yourself because you're panic closing and the whole nine from there. So really solid spot to be in if you're looking at scalping options. But for me, I trade the same edge every day. I use the expected move. I look at our support and then I read the VIX as well. And I draw these levels out on my 10-day, 30-minute chart. And then I always look for these two, which is the 20-day, 30-minute, or 15-day, 10-minute, for some sort of mean reversion. So you have the mean right here is 53.35. The mean on this uptrend is about 53.33 over here. So I like to be more on the put credit side today, but overall the RSI is at 70. So I don't mind having those call credit spreads, 40, 50 points away right now, right? That's my whole thesis on trading the markets this way. Like I need to really position myself properly because just randomly picking spots, you won't be a profitable trader, right? I'm just sorry, that's the reality to say that. But that's something I think about. And there's a lot of people in this market, and I would say most people do bad. And if you don't want to be a losing trader, you have to face that reality. You have to face that reality, right? You have to make the right decisions, get the right fills, and try to not screw yourself because, there's a lot of people in this market that are bullish. There's a lot of people that are bearish. It just takes one day of bad trading to really set yourself back mentally and emotionally. So you want to focus as much as you can on your same setup. I've been doing the same setups for like 3 to 4 years of the same thing. I've been trading for much longer, but we're talking 3 to 4 years of the same thing over and over and over. So I really only have two main edges in this market. I like to take a lot of the failed breakdowns, the mean reverting plays on all of these short-term time frames, even this one over here, right? We're starting to get to the top side. So anything like above 5,400 should be completely fine throughout the rest of the week. But we'll see what, of course, the market pricing tells us and if we even decide to go down today. Overall, though, I mean, when your expected move's already down to 11, there's a good shot you're sitting still, especially with something like NVIDIA earnings after hours, which has been the new Apple and Tesla this year specifically overall. So I just wanted to show you guys that. That should be your thought process, though. If you're coming down to take a trade, right now is kind of a bad time to take a look. But even like we'll do a 1DT because the VIX is high. There's some people that go, oh my gosh, we're in a bull market, so I'm just going to sell this. And they come in and they make a vertical spread and they just click, okay, and I hope it works. When you really want to do a little bit more work than that, you want to spend time saying, okay, the VIX is low, but why is the expected move so high? It's been 2 times higher than normal. Why is it so high? Well, okay, so we have NVIDIA earnings tomorrow. So, okay, I have a bullish thesis. So 40 points out would be 52.80. Maybe I give myself a 2, maybe 1.5 to 2 times the EM. And then you come all the way down here and that's your really defined risk, right? You could come down and say, okay, I'm getting 85 cents on this. I'm $1,000. I'm going to close this if it gets down to 30 cents for a win. I don't want to hold it to expiration, which you totally can. But you have to remember, like, you don't realize these gains until the trade comes off because you have all of that collateral that's out there, right? The market could drop 10 points right now. The market could go up another 10 points. So I just listen to what the market pricing's telling me. I try to position myself as properly as possible. And even for tomorrow, like I have an 85% chance out of the money. Not that great, honestly, because I'm bullish into tomorrow and I could totally be wrong. Well, that's going to be everything for me in this video. I appreciate all the support as always. You guys are always the best. Like I said, if you have yet to leave a like, comment, or subscribe, I'd appreciate if you did that now. And I plan on having more videos coming out soon. I am working with Options AI and Public this coming year, so I'm really excited about those partnerships. So you guys will start seeing me more, whether it's through their brands or just me working with them. So I continue to want to build myself and be the biggest SPX 0 DTE and 1 and 2 and short-term DTE trader that there is. I literally want to become number one in the space. And so far, I mean, YouTube's telling me I am, so I just want to keep my steady lead on everybody just sitting out front. No, it's not like that. It's all a good time for me, but I just want to keep YouTube fun, right? And keep creating some videos for you guys. Let me know what kind of videos you would like to see next. If you made it all the way to the end, comment a pumpkin emoji below. If you guys did make it all the way end, comment the pumpkin emoji, and then we're also going to do an Amazon gift card giveaway. So just type Amazon, throw the pumpkin emoji up there, and yeah, I'll enter you into a drawing. We're gonna do the drawing in 2 weeks, so first part of June, and then I'll announce the winner. I'll reply to your comment and get your email, and we'll send out that as well. So leave a like, got a comment for that, and we'll get everything going. But I do appreciate that, and we will see you guys in the next video.